there's not a lot of Bitcoin to go around. And, if countries want to have 500,000 Bitcoin or, equivalent, 500,000 Bitcoin, you think about it, that's roughly what MicroStrategy has, right? So now you're talking roughly, $50 billion of Bitcoin. That's not a very big reserve for a country. And so you
Yeah.
start adding up those demands on supply, and it's a big number. And then you look at pension funds that want to put 1% or 2% into Bitcoin, and you see the growth of the ETFs. The Bitcoin ETFs in 12 months have grown to have more assets under management than gold ETFs took 20 years to accumulate.
In this insightful interview, Fred Thiel, CEO of Marathon Digital Holdings, explores the growing importance of Bitcoin as a strategic reserve asset. He discusses how institutional interest, sovereign wealth funds, and even governments are beginning to embrace Bitcoin, creating massive demand for its finite supply. Fred also highlights the critical role of Bitcoin mining in securing US influence in a world where digital assets are reshaping global finance. Stick around until the end, where Fred explains how Bitcoin could serve as a strategic weapon and why building a national mining infrastructure is key to future financial stability. Also guys, if you like our cryptocurrency content, please remember to like and subscribe to stay up to date. Now, over to Fred.
As of a few weeks ago, every single Bitcoin in existence was in profit. When you had Bitcoin at $108,000, every single Bitcoin anybody held, no matter what price they paid for it, it was either break even or in profit. And if you think about back in August when we did our first convert to buy Bitcoin in this year, we ended up doing 3 of them. Bitcoin was at 55,000. And here you are at 108,000. That's almost 100% profit. And so there's going to be selling pressure. So you have people towards the end of the year, they're going to sell off some of their Bitcoin holdings and potentially buy back into the market when it drops down. I think a lot of people were expecting some sort of correction post election. It seems that, everything that the administration is saying today, tends to indicate that they're going to follow through on their commitments regarding Bitcoin and strategic reserve, et cetera. So I think what you're seeing is some opportunistic selling. And as we come around to the beginning of the year, as post-inauguration, when things start actually put in place, we'll start seeing it run again. I think the majority of the people who look at Bitcoin price are expecting a correction into the low 90s, high 80s, and then a return to growth, ending somewhere approaching 200,000 by the end of next year. I think that's a pretty valid scenario, just based on the demand that we're seeing kind of on the sidelines. If a strategic reserve is announced, that'll drive a relatively big push. If other countries start announcing reserves, again, there's a finite supply of Bitcoin, right? There are only 21 million Bitcoin that will ever exist. 20 million more or less have been mined. And of that, maybe 4 million are in wallets that either have keys that are lost or inaccessible for other reasons, or just won't move, 1 million of which is in the Satoshi wallet itself. So there's not a lot of Bitcoin to go around. And, if countries want to have 500,000 Bitcoin or equivalent, 500,000 Bitcoin, you think about it, that's roughly what MicroStrategy has, right? So now you're talking roughly, $50 billion of Bitcoin. That's not a very big reserve for a country. And so you start adding up those demands on supply, and it's a big number. And then you look at pension funds that want to put 1% or 2% into Bitcoin, and you see the growth of the ETFs. The Bitcoin ETFs in 12 months have grown to have more assets under management than gold ETFs took 20 years to accumulate.
Fred Thiel emphasizes that Bitcoin is increasingly becoming a strategic reserve asset for countries and even US states. He points out that geopolitical shifts, such as BRICS countries seeking alternatives to the dollar, have sparked interest in Bitcoin. While some nations may explore digital dollar options, others, like Bhutan and El Salvador, are already holding Bitcoin reserves. Fred highlights that US states like Texas and Louisiana are proposing bills to establish Bitcoin reserves. Additionally, commercial banks are starting to incorporate Bitcoin into loan portfolios to offset volatility and improve returns. Major financial players like BlackRock are also developing new Bitcoin-based financial products, signaling growing integration into traditional finance. He argues that just as the US maintains a strategic oil reserve, it should also build a strategic Bitcoin reserve to safeguard its financial interests in a world where Bitcoin could be used for international settlements. Furthermore, Fred stresses the importance of domestic Bitcoin mining. He explains that a strong US mining presence ensures sufficient block space for processing transactions, preventing other nations from limiting US access to the Bitcoin network. In Fred's view, both a national Bitcoin reserve and a robust mining infrastructure are essential for the US to maintain its influence in a rapidly evolving financial landscape.
Putin said at the recent BRICS meeting that he wanted the BRICS countries to be able to trade outside of the dollar system, and he mentioned Bitcoin was a good alternative, which is why you start seeing now those countries looking at Bitcoin as a strategic reserve. Donald Trump has also said that he wants the BRIC countries to continue to trade in dollars. What wasn't said is that I think there's a likelihood that you could trade in digital dollars, like Tether, for example. And I think what you'll see is stable coins take on a bigger and bigger role in payments, especially cross-border payments, because they're obviously much more efficient than the Fed. They're easier to get, easier to dispose of, etc. So what you'll see is some countries just starting to hold Bitcoin. You have Bhutan, which is a very small country that has a very big reserve relative to its population. El Salvador, obviously, everybody's familiar with. But now you're starting to see countries, but not just countries. You're seeing states. The state of Texas has a bill that's been submitted to the legislature to have a strategic reserve. Louisiana, I believe, also has done that. So you're now seeing more and more states looking at this as being a valid thing. You're seeing commercial banks refinancing commercial building loans where they put a strip of Bitcoin as a way to essentially balance for volatility, because from a risk-adjusted perspective, if you have 2% of Bitcoin in a portfolio or in a basket that makes up a loan, you can dramatically positively impact the return potentially, which can offset some volatility risk in the value of the underlying commercial asset that you're refinancing. So I think we're starting to really see Bitcoin come into the financial system. You're starting to see Bitcoin derivative instruments starting to happen, and people like BlackRock and others are very active in building all sorts of other products on top of it. So I'm very bullish. Why do we have a gold reserve? It's certainly not to back the US dollar, because the US dollar is not backed by gold. So we have a gold reserve as a way that we have the ability to pay for things in the event the dollar would be somehow locked out of a market or fully debased. And so why would you have a Bitcoin reserve? Well, if countries start trading using Bitcoin for international settlement, or they use it as a reserve asset, the US needs to have an ability to affect those markets. And if the US holds enough Bitcoin, they can essentially either support or have a threat of attacking a market by using Bitcoin as a strategic weapon. We have a strategic oil reserve today that was created as a response to the 1970s oil crisis and the oil embargo, as a way to protect this country from people keeping us out of getting oil. And today it's just used as a mechanism for leveling pricing in the oil markets domestically. But internationally, if we have a Bitcoin strategic reserve, we can impact Bitcoin price. We can impact people's ability to use Bitcoin. This is also why Bitcoin mining is so important. Think of Bitcoin mining as block space. You need to have block space to be able to process transactions. The more mining that exists outside the US, the more outside nations have the opportunity to block the US from putting transactions into those blocks. Right? It's kind of like airplane capacity. There are only so many seats in every block, and there's a block every 10 minutes. And if the US only has 10% of global hash rate, US transactions could only be guaranteed to be processed in 10% of the cases. Right? So it's very important for the US to have a significant amount of block space, somewhere upwards of 40%, such that no nation can lock US Bitcoin holders or investors, especially the large institutional investments that are coming into this country to invest in Bitcoin. So they can't be locked out of the market. So you have to have both the strategic reserve and a large amount of mining in the country.
As we conclude this insightful interview with Fred Thiel, it's clear that Bitcoin is not only transforming individual portfolios, but also reshaping the strategies of governments, financial institutions, and corporations worldwide. Fred highlights how the growing adoption of Bitcoin, combined with the push for national reserves and advanced mining operations, signals the start of a new financial era. With rising geopolitical interest and evolving technology, Bitcoin stands at the center of a global shift in how value is stored and transferred. As Fred emphasizes, the race to build strategic reserves and secure mining infrastructure is well underway, and those who recognize this early stand to benefit the most.